should monitor. Brought to you by the Controllers Council. My name is Neil Brown, Executive Director of the Controllers Council. And before we get started, there's just a couple of housekeeping items. After the presentation, we'll have a Q&A session, so please use your GoToWebinar control panel and we'll get to as many questions as possible. Now, in answer to a frequent question, you will receive a link to this webcast via email in the next 24 hours, so no need to take copious notes. So with that, I'd like to say something about our sponsor, and that is Oracle NetSuite, a cloud-based business management platform used by more than 28,000 organizations across the globe. NetSuite seamlessly integrates financial planning, accounts receivable, accounts payable, revenue recognition, tax management, and core accounting functions with real-time financial visibility to improve financial performance. To learn more, please visit netsuite.com and request a free product tour. So with that, I'd like to introduce you to our speaker, Thomas Kelly, Director of Product Management and Marketing at Oracle NetSuite. Before joining NetSuite, Tom founded T. Edward, a strategic and operational consultancy providing cloud and CXO services to Fortune 500 companies and startups. Prior, Tom held executive roles with large cap companies, including PepsiCo and eFunds, as well as privately held entities, including eBanks and PeopleNet. Tom, take it away.
Thank you, Neil. Just a little bit of insight for the audience today. First, thanks for joining. I know you're all busy, but believe it or not, I think there's a 100-degree difference between where Neil is and where I am. Neil is in bright and sunny Florida, and I am in the frozen tundra of Minnesota. So just want to let you know, Neil, I liked you when it started, but when you shared you're in Florida, then I don't know.
Oh boy,
high esteem.
you can visit.
In any event, as Neil said, doing quite a bit of stuff these days for Oracle NetSuite. Just to give you a little bit more detail, my main focus is our global cloud financials. So focus on the product management and product marketing for that. We also have verticals at NetSuite. So my main verticals are the software high-tech vertical, general business, which is the hodgepodge of everything. It doesn't have a home, and nonprofit. One of the things that we are doing is what we call CPM, corporate performance management. We have our budgeting and planning out there currently today, and accounting hub functionality, but we're soon to be coming out with things like account reconciliation. So really focusing on that, close process and all. So why don't we go next? And yes, with Oracle NetSuite, and we are a public company. So here's our safe harbor statement. Next. And this has been approved by legal. Do not make any decisions to buy or sell Oracle stock based on what I say today. Believe it or not, legal has approved that. So next, please. So I'm going to talk about three things today. One is identify what are the key performance metrics to track. Two, describe about what's best practices for juggling finance and strategy. And as we talk through this, you're gonna find that accounting is important, but being a strategic business partner is probably as important. And then finally explain how technology can help steer your business through really any type of financial future, whether it's one of expansion, contraction, or something in between. Next. So first, let's talk about identifying and the key performance measurements to track. Next. And I want to start out with kind of some woeful tales, if you will, about KPIs that really were, well intended, but first one there is the Soviet Union and sheet glass. And the original KPI that they were using to incent the manufacturers was pounds of sheet glass produced. And true story, what they were getting was sheet glass that you couldn't even see through. So considerably thick, not as many, but pretty big pieces of sheet glass. Then they said, let's do this. Let's incent them on number of sheets produced. And then guess what happened? They had sheet glass, which was very fragile and breakage, And so, didn't quite work out. Well intended, but didn't work well. This next one is kind of one of my favorites, which is pigtails. And not talking about the hairdo, I'm actually talking about real pigtails. The Army post, or the Army fort in Benning, Georgia, was having a real problem with feral pigs. So what they decided is that they were going to give a bounty for every pigtail that a hunter would produce. And I think it was about $40. And it was amazing. They were getting an incredible volume of pigtails. Unfortunately, what the hunters were doing, or even non-hunters, is they were going to slaughterhouses, which there's plenty in the area, and they were getting the pigtails. They were buying them at like, I don't know, $10 or $15, and they were bringing them and selling them to the Army. So while they were getting the pigtails, the feral pig population certainly wasn't decreasing. If anything, was increasing. The next one is the Wells Fargo new account growth, and I can personally say that I've experienced this one where Wells Fargo put in place, what I would consider to be some pretty daunting sales numbers about new account openings. And what they're doing is the folks at the banks were opening accounts in your name. You may have had an account where all your activity is in, but they were getting incented on the number of account openings. So they were opening all these accounts. So nonetheless, I think we all know how that ended. But the next one was building the Transcontinental Railroad. And what Congress did at the time is they said, we're going to incent you or pay you on per mile of track laid. And I don't know if you've ever seen like old maps and everything with the train tracks, but it's definitely not a straight line. It's always, like this. So they weren't laying them in a straight line. They weren't going the shortest distance between 2 points. It was always curved. So nonetheless, another example of this. And then one that I came into a company, and they were incenting the sales force to drive calls on the number of outbound calls being made. What they weren't doing is they weren't tracking it, where the numbers were, what the numbers are being called. And as you can imagine, food delivery was up amongst a lot of other things. So this is just the example of when we talk about KPIs, how simple it may seem to be on the outset, but in practice, it doesn't work out as intended.